Yo, 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 what it is, what it ain't, man. It's your favorite profitable slash non profitable trader ever in the world. You're broke, but rich trader in the world. Inaki FX. Yeah, man, I'm just gonna keep it honest, keep it short, sweet with you guys. So today was crazy, man, in the market for gold. Oh, by the way, I just became like a profitable trader. Within my last 6 months. My 7 year journey, basically just now becoming, profitable trader. But anyways, today is Friday, 24th. Yeah, so today's Friday 24th, man. And it was a crazy day. Like it was a crazy day for gold. Um, a little bit about myself. I am a I work a 9 to 5. You know what I'm saying? So I live about an hour away from where I work at. So normally my morning routine: wake up at 4 3, wake up, get on the charts immediately on my phone because while I'm getting ready or whatever, and then just kind of see what's going on in the market, kind of understand what's happening, see the pairs that I have set up, and yada yada. So for today, which would be early, about right here ish, right? I oh, thank you. I saw that we had a bunch of weird movements going on, right? So for DXY, right, a dollar stock, a dollar signal, we saw that we had a not a huge increase, but a solid increase, while simultaneously gold was also increasing. So it was kind of like strange. But in the back of my head, um, I saw that gold was reaching higher highs, and we had a lot of consolidation right here at this period. So I knew that their sales were going to come, but I didn't know how far they were coming or when they were going to come. So my mind is okay. I see that we're clearly trying to push above this all-time high. So I decided to take profit and some quick scalpels within these two candlesticks. Now I have a scalping method that I use that's different from what you see on the chart, because on the chart is for a my chart setups. These right here are made for longer trades, more of a intermediate day trading type of setups. For my scalping setups, I have a whole totally different method. It involves the VWAP and Hikinashi candles. Hakinashi on tomato, however you want to say it, doesn't matter. But that's what it involves, right? So, with that being said, I switched over to my scalping method. Grabbed, excuse me, I grabbed a couple $100, $200, $600 on my prop firm account, and I grabbed those trades. And then right here, we started to purge this level and immediately come back into our range. Um, I took a pretty big loss, took like a $443 loss. So I was like, okay, cool. This is where the Bears are going to come in, and this is where we're going to see our reversals start to happen. So within my scalping method, I took a quick scale to see if the bullish power was actually true or not. So I did. Took a quick scalpel sale. Made about That's when I made about my I think I made about $400 off of that. Then another like 643. So I was like, okay, cool. I need to set up for a longer. I need to switch over to my longevity, trade, my 30-minute setups, my intraday and my day trading setup to kind of catch the full bull run or bear run. So how how I kind of anticipated this level, right? How I kind of anticipated more of a push all the way down here to our extreme was when every time I see these wicks on gold, they always seem to fill up with the actual body candle. This is an exception up here because this is clearly a purge, and they trapped the buyers to sell off. right? So that's an exception to the rule. But I see this wick here, right? So as soon as this candle closes, I'm going to confirm through what I believe is going to happen with my bias, right? So my bias is sell. And if you go here, you look at the all-time high, our candle, that red line is our all-time high. That candle closed slightly above that all-time high. Normally I wouldn't take a trade, but because of the fact that it wicked all the way through with such velocity, I decided that when it closed, if there was no opening wick that pushed up, I was going to get in the trade. So guess what happened? No open came, no wick up, it exploded down. So my first initial like a sticky area, I like to call them, was right here where I had this wedge formed. It exploded through the wedge. It exploded through the wedge, and then it ended up closing at a 88.60 level, right? For our fit. When I see that, and I click over here in the 4 hour, and I see that the market structure is clearly and still in the bullish area, and the fact that it is also blowing through the velocity that it is, with the huge imbalance that it is, it is extremely unlikely for it to reverse in this area, right? Extremely unlikely. Even though because it is in our extreme premium zone, it still doesn't make sense for it to keep pushing. It doesn't make sense for it to reverse off of this and keep going up. It is a possibility, but more than likely, it's not going to happen. Why? Look at this 4 hour wick. This 4 hour wick clearly tells me that, hey, price purged through our 161 0 percentage. Now, when that happens, it doesn't happen often, but when it does happen, there is an immediate reversal happening because of how extreme the level is, right? Because of how extreme the level is, you can almost bet on it going the opposite way. I would probably bet my house on it, right? So I see that, hey, it closed below our 88.660 level. Let me take some profit off, but I'm going to keep a few running because it more than likely will reach our extreme discount zone before it actually reverses up. So I took some profit off right here at this close. Right here at this close. Right, so boom. It immediately pushes up. And then I see, okay, it's having a resistance zone over here at the sticky point. If it closes above this level, that's when we know that the bulls are back in the market. We're good to go. It never even reached that level, right? So now I'm waiting for it to close. It closes about halfway, midway point of our discount zone, right? So zone to zone trading, right? If it's close by halfway, I'm like, okay, we still have a lot of room to fill up before we can see any more bulls back into the market. So I switch over to my scalping method because before I like to get into a larger position in my intraday setup, I like to take small scalpel trades to kind of give me an indication on where the market is going. So immediately, as soon as my scalpel trade started going the right way, the method that I use, 3 candles, one doji, one flat bottom. Okay, I'm like, boom, I'm good to go. I got my scalpel. My scalpel immediately went into green. So from there, I let that run, and then I went back on my main setup, see where I was at. I saw that I was crossing over my counter trend line, this red line which is forming my wedge, this counter trend line. It crossed over there with such velocity and just power. I'm like, okay, I'm going to take a little bit of a risk because I'm more of a riskier trader, and I entered in a full position. The only thing that scared me was the fact that we were approaching this zone, which before in the past was a strong zone of resistance and support. If you stretch this all the way out, it is resistance and support. This right here is also another key level at the fair value 50% mark. So a little worrisome, but I'm like, you know what? The bears are in the market. It is very clear from the amount of pressure. I know that I can at least get to my discount zone without there being much loss. And that's exactly what happened. Played out to a T. Came down here, didn't really touch it perfectly, but it did get in the velocity of my discount zone before it decided to retrace back up. Now, to go into detail, we really have to look at two things. Excuse me. We have to look at what exactly was going on with the dollar. Right. So if we go over here and look at the dollar, we see a lot of consolidation. This is pre-market. We saw a lot of double top built up. But right when I woke up is when we start to see a lot of push upwards. Right. So we knew that this push upwards was going to somehow affect gold. We just didn't know when. We just didn't know when it was going to affect it. Because at 8 o'clock, it was not trending like that. You know what I'm saying? 9 o'clock, 10 o'clock, it was not trending like that. That didn't get affected until after these orders were already inputted in. So we saw that as happening. We're like, okay, boom, we're good to go. You see our double tops. Our liquidity was built right here when the buyers are trapped. Liquidity was also built right here for the sellers. The sellers get taken out with such velocity, it's ridiculous. Closes above where our liquidity was built, right? So from there, we are golden. We're golden. We're good to go. We know what's happening. We know that liquidity has been taken. There was a retracement. It exploded upwards, meaning that the bulls are in the market. We are good to go. Now we're just going to sit here and watch this play out, see how far this goes. And at about 10 o'clock is where we see, 10 o'clock, 11 o'clock, where we see the effects of the dollar kicking on the gold market. And that's where we see all this start to happen. Two really key things here to mark. Two key things here to really think about on the way down. All-time high level, right? This all-time high level can always be a rejection or support, right? It went through an all-time high level, meaning that the bears were definitely in the market, but price was being bought up right here, meaning that it closed over that all-time high. People took the profits, and that's when it started driving back low. So you have to keep those things in mind. Anytime that, anytime price is going to an all-time high level, all-time low level, those things are really, we don't really see all-time low levels, but an all-time high, those things are really key. Where institutions will push price up so it can close out at an all-time high level before the real market moves happen. Always key things to look at. So now, since we caught this bear side, we will definitely be trying to catch this bull side within the next coming up week. Now, what we can see here is that price is two things can happen, right? Either price can come back down here, grab all this liquidity, because I don't know if you can see, but we have a perfect double bottom right here. Price can come all the way down here, grab this double bottom before it actually retraces back up, reach for a deep retracement into our discount zone, and then go back up, right? That's one that can happen. Or, as we see on the 1 hour, at our 23 level, we have a clear close, double close on the 23 level. So this is a kind of an early indication that the bulls are going to come back to the market. I probably won't enter a trade until we close over at 38 level or 50% level. I'm sorry. If we close over that, I'm going to be good to go. I'm sorry, this is at 38 level. So if we close above this, we know that the bulls are in the market. We're on our way back up. So boom, that's my kind of my gold breakdown, my gold trade. I'm thinking about adding in face cam and things of that nature. I'm recording off my laptop because my PC setup's a little weird right now. So I'm trying to figure all that stuff out so it can be more precise and accurate, and you guys can really see